Thank you very much, Mr. Varadarajan. And with that, ladies and gentlemen, a small change to the agenda. We're doing the panel discussion before we go forward to the KPMG presentation. So we will now invite our panelists on stage. May I request all of you to join in with a round of applause as we invite our panelists for Re-orienting the Indian Banking Structure, a need for dynamism in the economy. Our inputs to the session are going to be done by Mr. Rakesh Sethi, the Executive Director, Union Bank of India. May I request all of you to give a round of applause and welcome Mr. Sethi on stage. Joining us on the panel, we also have with us Mr. R.K.Takkar, the Executive Director, Dena Bank. A round of applause. Mr. Patrick Kishore, the CEO, Institute of Development and Research in Banking Technology. Let's welcome him with a round of applause. Dr. J.N. Misra, CEO, Indian Institute of Banking and Finance. And to moderate the session, we have with us Mr. Eric Anklesaria, the partner, KPMG. Let's welcome him with a round of applause. With that, I'd like to hand over the session to Mr. Anklesaria.
Thank you very much, and a very warm welcome to all the ladies and gentlemen, and to the distinguished panel members who are on the dais out here to share their views and opinions about reorienting the Indian banking structure, a need for dynamism in the economy. I think I'll just start off with not more than taking 5 minutes of your time, because I think it's very important. All of you all have gathered out here to listen to the views and opinions of the panelists. But just to set the context and get the ball rolling, I think the Indian banking industry has seen a lot of change in the times to come. Over the past few years, we've seen a number of changes that are happening, like opening of the license regime back to banks out there, introduction of the payment and the small banks that are coming in, and we're going to see a stiff competition coming in from those areas. A high degree and a need for specialization of smaller banks and larger banks into certain niches. And of course, dealing with the larger issues about capital, NPA, etc., which calls in for need of consolidation, looking at the structures and the holdings of various banks, the government stakes, etc. So there have been a lot of discussions in and around that particular subject. And also about how do public sector banks and how do banking and financial institutions gear up to meet the challenges in terms of people. Because that's also been, kind of at a very, very alarming rate that, we're going to see a steep decline in the workforce, especially in the public sector banks, the people who've been trained, people who've been there for a very long period of time. There's a very heavy retirement that's coming through. So at one side, we have the challenges with the economy is posing in terms of, how do banks grapple with so much that they need to do. At the other side, we don't really have the skilled labor currently present in the bank to be able to tackle these things. So how do we balance both of those and how do we take them to the next level is something that we would want the panelists, etc., to share their views, ideas, thoughts, and see how we can make the maximum out of the comments and the suggestions given by the eminent people who are there on the stage. So with that, I would like to commence the discussions going forth with the panel members. So we have about 45 minutes of time. The way that we'll structure it is that we will go through a panel discussion, take the views and opinions of each of the eminent panel members, and then the last 10 minutes or so we'll have for the question and answers to the complete group and audience so that they can feel free to ask all the eminent panel members whatever questions they have in their mind. So I think this would be the broad structure that we would follow for the panel discussion. So thank you very much, and I hope you have a very enjoyable listening. Thanks. So am I audible? Is this fine? Yeah. Okay. I think I'll start off the first question with Mr. Rakesh Sethi. It's again a question on the entire consolidation and the banking structure which is there. Of late, we've been seeing that a lot of banks, especially public sector banks, which literally control about 76% of our asset base, has been in a vicious circle about being able to attract good business, trends showing a decline in terms of capital requirements, in terms of the entire NPS, etc. So there is an economic situation which is prevalent on banks right now, being able to manage and control cost, etc. So we would like to know, what are the strategies that can be adopted by such banks, or what are your thoughts and ideas about the strategies which banks can adopt to revive themselves and come out of this situation which is there? Mr. Rakesh.
Good morning, everybody. Good to be in the panel. And Mr. Eric, thank you very much. I think we are again together after a long time. Topic remains very interesting, consolidation of banks. And some of you, those who have been going through the newspapers, this Gyan Sangam, I think, has given a lot of articles to go about and healthy discussion to emerge out of that. The issue which Mr. Eric has raised about is consolidation. Is it required or is it not required? I think that is the first question by itself. And then a public sector bank and private sector bank, that's how I want to put it, not that public sector bank versus private sector bank. If we look at these two issues, I think I can develop my debate from there itself. First issue is consolidation of banks. Why do we consolidate? I think if we pick up that idea in mind, is it consolidation because just there are good number of people around, or consolidation for the sake of just consolidation? Why I am putting this context to you is, like if you are in a lane or maybe in either of the big mall, you have the Raymonds also there, you may have all other type of varieties are available to Van Heusen, to Philip Louis, to all those. Do we say them no, since there are 5 or 6 of them, better let them consolidate and sell in one shop? Or the company should be one? I think that's not the idea. Customer wants more of a diversification. Out of that, one is the competition comes, another is the quality also comes. Because everybody knows what is that he is selling, whether there is a market available or not. And if somebody is selling a better product, certainly the market will divert to that side. Similar is the question, I would say, for the banking industry. At times people say, no, there are, like say, Syndicate Bank branch is there, then Dena Bank, Bank of India, Union Bank, there are 6 branches maybe in the similar lane. Quite possible. But if it is a market with plenty of population available around, it's for the banks to decide where they want to be, where they don't want to be. Only issue which comes is why the consolidation talks come into picture is, everybody is like the public sector bank, more than 52 or 60% of the ownership is with the government of India. With the same owner, do you want to have different shops, if I can use the word, in a similar type of a situation? This is one question which perhaps certainly looks for, there can be a consolidation. Consolidation, if it is for cost saving, yes, to that extent it should be there. But I think that is not the only criteria where the banking industry today is in. If you look at the NPA level of different banks, and if we say for the consolidation, merge 2 of the banks, am I making the banking industry strong or weak? I think then that will be again a question. And we have seen previously some of the cases where some of the banks merged with the bigger bank. The issues are of, I am talking about PNB and I think was it New Bank of India, it could have merged somewhere in 80s or what like. Till date, the staff problems are still prevalent because you are merging 2 cultures. It's not merging of the figure or the balance sheet, it's merging of the minds also. Like say if you have 20,000 plus staff which is to be merged with a bank which is around 40,000 plus staff, that culture merger doesn't happen so easily. There are issues on that. Promotion levels, policies may be quite different for the 2. And the bank which you are merging, maybe some of them, if we are giving them the VRS package or something, then there is again a heartburning. I think those are equally the issues which are to be taken care when we go for a consolidation. But consolidation can be positive, like say if Andhra Bank is there which is specializing in that particular bet, or maybe other banks which have a particular niche of area. Yes, there we can try to see, okay, let them be good at this area, the other bank, if he is good at some other area, consolidate both of them. If that type of situation comes, it can be good. But merging of balance sheet only is not the consolidation. It's more of the other factors which come into play that has to be taken care of. Another issue comes if we are looking for consolidation. Same time the issue comes whether now we are going for license of small banks and payment banks. One side we are looking for diversification in the sense there are more banks which are required. But then if we are looking one side that, other side we are saying consolidate. I think that that discussion doesn't come to a very positive or a better conclusion. Certainly it's a thought process which need to be taken care of. I think looking at 45 minutes of time, I will just like to touch on one more topic. Public sector banks. I think maybe you will be reading lot of criticism. Their NPA level has gone too high. There is a inefficiency available. Criticism very well accepted and admitted also. But if somebody compares the apple with the apple, yes, you are comparing it appropriately. But if you compare apple with a mango, comparison is not there. Why I am saying so is using the present context of financial inclusion, where around 10 crore odd plus accounts have been opened. And if you look at the bifurcation of that, private sector banks accounts are only 28 lakhs or less than 50 lakhs out of 10 crore. If that is the, like say, then your public sector character has to be maintained. The purpose of public sector bank to be supporting the government in these type of initiative, because it's ultimately we feel proud of, not that we have been pushed to. As a bank, we feel that we have been able to bring those 10 crore accounts, the people, 10 crore people, to the fold of the banking. So that's a pride which we take into. But if you compare public versus private, yes, that comparison cannot happen. Similarly, if you look at infrastructure financing between 2008 and 12, if you are looking at BRICS economy, every country has failed in their GDP. India, even it has come down from 9% to 4.5, but 4.5 is a comparable, is a thing which you can talk proudly. Look at Europe, look at USA, you don't get that type of a GDP growth. And 2008 to 2012, if you have been able to maintain that GDP, how it has happened? Because public sector banks have been providing finance for infrastructure growth. Private sector bank, I think that time they wanted to remain silent on infrastructure financing. Now you provide that and environment clearances and all those if they don't come later on. You have been a vehicle which has provided that mobility to the society or to the government to take care of that infrastructure forward. But if the clearance is the issue, I think maybe government is certainly looking into that. But private sector, if we compare, no, their NPA is low and public sector bank is high, then comparison again, it's a apple and mango. So I think that part only need to be taken care of. Otherwise, consolidations are good. Where there are niche areas, yes, do that part. But public sector will maintain its character of providing as a tool to uplift the economy. That factor cannot be denied.
Thank you, Mr. Sethi, for sharing your views. I think they were very, very well thought of ideas. I think moving on, I would like to pose the next question to Mr. Takkar. There is a lot of thrust from the government to reach the unbankable population and the unbankable areas. Now, it's been a constant topic of debate as to is this so-called financial inclusion, the models that are currently prevalent out here, really sum up to any profitable ventures for banks? And what, according to bankers today, are the main challenges that they see in being able to provide these services to these unreachable and unbanked population? So I would like to have Mr. Thakkar's views on, whether it is, whether this makes, from an overall banking perspective, how much of sense does it make for banks in terms of investments, cost, etc.? And are they really able to penetrate into and get a wallet share out of those customers? And what are the challenges that they see in being able to reach these masses out there to the unbankable population?
Yeah. Thank you, Mr. Eric. I hope I am. Can you hear me? I think something. Yeah. Good afternoon, everybody. And thank you, Mr. Eric. Eric, you have raised a very valid issue, I think, which is now one of the major, I think, thrust areas of the present government, that is the financial inclusion. The banks have done a good job, especially the PSU banks, in under the Jan Dhan Yojana, as all of you are aware, more than 10 crore accounts have been opened in a span of hardly 4 months. And it's not, I think, a small achievement. See, one perspective is as a social cause. We have to bring the entire population within the banking channel. That is one aspect. I think we should not overlook that. The other aspect is the commercial viability of that. I think as a banker, especially as a PSU bank, because we represent the public sector banks, we are taking care of both the perspectives. Social, yes, but even if we see from the commercial angle, what we feel, what the figures we are getting, I think it makes sense. See, the banks have been able to collect around 9,000 crores as on date. And that after the major accounts being a zero balance accounts, because DBT, etc. is yet to start. So once that takes place, the amount of funds which will flow into the system, and so many, the large section of the population which was not a part of the banking system will come into the fold. I think that's going to be a big achievement. The only concern, I think, is going to be the cost of operations. The BC model which has been adopted under this Jan Dhan Yojana has been quite a success. And it is going to help to bring down the cost of funds, no doubt. Cost of operations, sorry. But another thing I think which has more relevance today, rather than only opening the accounts, is I think the financial literacy of our folks who are not a part of the banking system. I think banks would have to do a lot in that. Because when you talk of financial inclusion, it's not just opening an account. It is meeting the requirement of a person who is not having access to the credit. And that has to be a timely credit. Another thing is providing part of that is the insurance cover also. So that if we view that in totality and we make our BCs self-sufficient in the sense that in addition to the only account opening and operation of those accounts, they also render other banking services, and also to the customers who are not a part of this opening of the under Jan Dhan. They can also, because they will be having mini ATMs with them, and that's what the banks are working out, whether we can offer those services to other customers also. Plus, what the banks would be doing is they will be also opening other channels. It can be a small kirana shopkeeper whom you can take your payment from. So once that takes place, I'm sure it will become commercially viable also for the banks. And once the DBT and all the funds start flowing, and the main thing is to develop a habit. It's not a question of just getting a fund in the account or opening an account. Once that banking habit develops, I think that a large section of the population which are not in the mainstream would be brought into the mainstream and will be part of the economic development. I think if that takes place, I'm sure it would be a commercially viable proposition for the banks. Thank you.
Thanks a lot, Mr. Takkar. I just recently remembered an event. Right now we were at Vibrant Gujarat out there, and there was a panel discussion which was going on with the banking secretary and all of that, just about financial literacy. It just struck me right now. There was a farmer which had come from all the way from Rajasthan, I think, just to ask one question to the banking secretary. And I think it was very pertinent about financial literacy. And because Mr. Takkar did touch upon financial literacy, I thought it was very pertinent to mention that. So after the panel discussion was over and, you know, the mic was thrown open to the audience, this farmer who had come in all the way from Rajasthan had one question to ask the banking secretary. He said, I have more than 1 lakh cows. I produce more than 2 lakh liters of milk a day. He says, I have no access to banking funds because I don't understand banking. And he also surprisingly mentioned that though there are banks in that area which are there, they don't understand my business. So whenever I go to them and I try to explain things to them that I have cows, I do milk, and I do supply so many things, and I have such a lot of cash sitting with me, because they are not able to appreciate what I do as an agriculturist, as a thing, they are not giving me access to funds which are ideally required for me. And as a result of which my business, my things are getting affected very, very drastically. Today I could produce 4 lakh liters, I could have more cows, etc., and make a lot of better living for people in and around me, because I employ more than about 500 to 700 people. So his main question was that financial literacy is not only to me, but also to banks to be able to understand the business and the situations in which we are operating, so that they are comfortable lending to us. Today, I think what his main question was that since the bankers were very comfortable with the kind of business and orientation that was there, they were not entertaining these kind of people. So I just thought that it was very, very important that, financial literacy is a two-way concept where we understand and appreciate the pains of what these people go through, and on the other side also educate them about what we can do better for them. So I just thought it was very pertinent to mention about that. Moving on about my next question to Mr. Misra. I really touched upon that topic, that there is a lot of talent retrenchment that's going to happen, and we're going to see that coming in the years to come, in the next 2 to 3 years. So I would like to have his views and opinions about what strategies do you think that banks should adopt for capability building and reorienting talent, when we're really talking about reorienting the banking structure.
Thank you, Eric. And good afternoon to all of you. I think we must understand why this kind of an issue has arisen in the banking sector and how we are going to address this issue. Early 70s and late 60s, bank nationalization took place. Many people joined in the banking sector, especially in the public sector. And these people are going to retire in next 3-4 years. So that has created a vacuum, large vacuum in banking sector, especially public sector banks and old private sector banks. The answer to this capacity building, one is fresh infusion, that means recruitment, and second is training and retraining. That is how we can fill up this gap. But at the same time, it is important to note how the delivery should take place. In last 5 years, a lot of recruitment has taken place. About 3.5 lakh people have joined in the banking sector. They are young. They speak and understand a language which is different from what it was earlier. So it is important to speak and deliver in the language they understand. So what I mean is that these people are tech savvy, these people have less patience, and these people have born in the age of Google and internet. So our delivery should also be in that particular way, so that we can reach out to these people, and then only this capacity building exercise, which has been entrusted to the banking sector, can be fulfilled. So to answer to that, we must deliver in the e-ways, e-learning, e-books, e-nuggets, apps, so that it is taken by them easily and delivery becomes proper. Second aspect which is required in the capacity building exercise is knowledge mapping. We need to find out what are the gaps existing in different areas. Because unless we know the gaps, we will not be in a position to breach those gaps. So knowledge mapping exercise is required to be done in every organization to see where are the inputs required. Third aspect which is important is to give the right type of input at right point in time. There is no point given to give an umbrella approach and giving all sorts of input to the people, that they will not be in a position to digest. So this input also will have to be in different stages so that these people can absorb and their skill level develops. So training system must respond to these needs and deliver in the entry level, basic level, the basic input, so that they can discharge their day-to-day work. And after that, when they grow up in the organization, maybe in the mid-level, managerial level, that point in time, specialized input is required, maybe in treasury, maybe in HR, maybe in IT, maybe in risk, maybe in compliance, etc., etc. And third level is when they grow up in the organization again, then they will have to take the leadership role. And at that point in time, the inputs relating to those leadership role is important. So what I meant to say is that these input also will have to be delivered in stages so that these people are in a position to absorb and utilize. Because what is important is to make people job ready. That is most important, rather than giving host of knowledge to them which is of no value to them. Some other points I'll just mention and stop. Mentoring and coaching, that is also important, and a culture has to be developed in every organization so that this aspect is taken care of. Because as we know, 70% of the learning comes from experience and really, doing work by himself or herself. So their mentoring has a very great role to play. And secondly, we must evolve a continuous development and continuous assessment process. That is also important because once a knowledge is acquired, and if there is no refreshing of the knowledge at different stages, then that knowledge is lost. So there should be a system within the organization of having continuous development and continuous assessment so that he can effectively utilize his knowledge. Third important thing is top management involvement. That plays a great role in capacity building in any of the organization. So it is important that top management should take interest in the training program, and so that this capacity building exercise is fruitful. Coming to the retention part of it, I think a few points are very, very important. First is we must meet the aspirational need of the people. People who are joining in the organization, they join the organization not only for money, but because of satisfaction. So his role profile should be clear, it should be properly explained, and he should derive satisfaction out of that. That is very important in his career development. And there should be a very, very transparent performance evaluation system in place. It should be transparent, it should be known to the people who are being examined, and that is how this can be translated in the growth of the person in the organization. Yes, money is important. Remuneration should be competitive in the industry. That is also important. And lastly, the trust and value system in the organization. That is also important from the retention point of view. So if these points are taken care of, I think any organization can have good set of employees under their command, and they can they can retain people in a very fruitful and effective way. Thank you.
Thanks a lot, Mr. Misra, for sharing your views. My next question is to Mr. Patrick Kishore. On the report for the committee to review the governance of Board of Banks, they have proposed in the reduction in the government stake in banks, which is there to boost the structure. So how do you think that, is this a positive move towards reorienting the banking structures, or what are your views and opinions about the same?
Thank you. Thank you, Eric. See, government stake so far in public sector banks has been such that government has an overwhelming say in the governance of the banks. Now, why is it sought to be reduced in the first place? Is it because of an apprehension that the private investors are unwilling to invest in entities in which they do not have a say in the management? If that is the case, then why any stake of the government at all? Why not make the entire banking industry publicly held? Now, if you see, in market capitalization, in the world's top 20, there are 4 Australian banks by market capitalization. Now, how did that happen? Not because they were public sector. If you see, even the biggest bank in the country, State Bank, does not figure in the top 50 banks of the world. Why is that? It's because I have a feeling that in our country, the banking industry is too fragmented. If you go to a place like Connaught Place in Delhi, you will probably find 150 bank branches. Do we need them? I don't think you need so many banks there. This whole business of government control, I think, is one thing that is keeping back the private investment coming into the banking industry. That you will see this also because how many new banks are being licensed? Just 2 of them. Is that all the business community in the country is capable of? Today, if the due diligence is properly done, I believe that India can have many more banks. But do we need them? I don't think so. We probably need fewer entities, but much larger entities. It's possible by merging banks. It's possible by rationalizing the branch structure, reducing costs, optimizing the cost structure, and so on. So I believe that the reduction of the government stake in banks per se is not going to solve any problem. What I believe is a greater private participation, much more investment, because otherwise what is the incentive for anyone to invest in a bank? Do you see bank stocks very volatile? Can people make money on bank stocks? Not many banks. So I believe that if you attract more and more private investment into banks, you will bring in better management structures, you will bring in better management practices and so on, which makes it again a worthwhile business to invest into. So I think we put the cart on the horse. What's the word? The cart before the horse. Yeah. What we should be looking for is increasing the private investment rather than simply arithmetically reducing the government investment.
Thanks a lot, Mr. Patrick, for your views. We'll have one last round of questions, and then we'll throw it open to the audience. I think one question for Mr. Sethi, which is there, and then I'll again go down to Mr. Takkar. There has been a lot of debate and a lot of talk about the entire operational efficiency of public sector banks. You know, are we really operating in an environment very effectively? Are there a lot of overheads, costs, etc., that are being incurred by these banks to really sustain their kind of operations with this sharp increase also in capital requirements and the way the NPAs are going? So what are the measures that public sector banks are taking today to operate effectively? That is number one. And also induce the good practices of risk management and all that to enforce and reinforce investor confidence into banks.
It's ultimately the banks. One is that I would say all the public sector bank in today's context, they realize, yes, operational efficiency has to certainly improve. Once that factor has been taken into account, and at times the banks are compelled also to look into that. If your NPAs are increasing and there is not too much of a credit demand, economy is slow, In that case, what is the area where you can focus upon? I think then the question comes to operational efficiency is the best thing which you can improve upon your margins in a way. If, like the gentleman said, no, private sector investment has to increase, then public sector bank has to show, no, we can manage ourselves better. Within that, I think 3-4 things which you raised a point on the risk management first. If capital is required more, one is that you increase your capital, another is you conserve your capital. I think that conservation of capital, which was perhaps not that very much visible in public sector bank, now it's happening in a bigger way. Those people, those who are understanding the banking concept of it, invariably there is a risk weightage linked to all type of assets. Now, if you are giving a financing to a risk weightage where it is a 150% or like say you are financing NBFCs, so there the risk weightage is higher. And if you are financing a priority sector, there the risk weightage is comparatively low. Now, the banks are trying to match their balance sheet, prioritizing where do you intend to finance. If I retain the same capital and provide 100 rupee as a loan to NBFC versus a 100 rupees for a housing loan, my capital requirement is entirely different. So that capital conservation is happening in a bigger way within the banking industry. That is one point. I would say 30 to 40 basis point capital banks are able to save if they have done the capital conservation exercise very properly. That is one of the things. Now coming to the technology, I think that is where the banks have to be very conscious of. Recruitment happening, but then staff retention is one part. At the same time, what is their education level so far as banking is concerned. Within that, if technology is provided more as a enabler, like say now the mobile banking is coming in a bigger way, you have to have a staff who knows how to popularize it and get it implemented. I think people, those who are above 50 years of age in the public sector bank, perhaps are not that very tech savvy to experiment. But at the same time, they have the fundamentally knowledge available. Yes, this is a way forward. So using your younger staff to bring in that, I think it will increase the operational efficiency in a big way. Everywhere you have you to provide a staff, I think that's not necessarily required. This banking facilitator, the way the concept is coming into, if government intention is that everywhere there is a population of 2,000, you have to provide a reach to them. Now, everywhere if you will open a brick and mortar branch, practically it's not going to be feasible and it will be rather a more cost disincentive. There this banking correspondent will certainly provide a good way of looking at it. Certainly there are questions raised, are they paid adequately? Because if they are paid 5,000 rupees, it doesn't cover their costs of living even. But then, do we have to provide them only for financial inclusion? Or can we use them for NPA recovery? Can they be used for providing that financial literacy? And then can they be, as we are linking with the banking selling of third-party products like mainly more insurance and health insurance, or may it be a life insurance or vehicle insurance, all those things certainly they will be, once tied up with that gentleman, operational efficiency increases, your cost of operation also decreases. I think some of the steps, if they are taken effectively, will provide a good way to improve the operational efficiency.
Thanks a lot, Mr. Sethi. Now, my next question is to Mr. Takkar, again on one of the structures for the banks. There has been a lot of debate and discussions around various holding companies and subsidies which banks have set up today. You know, many banks have subsidy arms for their home loan financing, various securities, etc. Some of them even have it for IT. Has this model really proved beneficial to the public sector banks? And if not, then what are the changes that are envisaged by banks to really make this model work?
Yeah. See, when this model was implemented, sorry, I think it's fine. At that time, the capital was not a constraint. Now, I think with all the new norms, Basel III coming into play, capital has become scarce. So banks have to think over this, whether to continue with the subsidy or no. I think that's a very relevant question in today's time. So to conserve capital, as Mr. Sethi was also talking about, And because the banks are today, as on date, are not able to provide additional capital to their subsidiaries. I think that consolidation within the banks, within their subsidiaries, as a holding company, which they are holding as a major shareholder, or almost 100% in their subsidiaries, I think that will have to change. This is one thing vis-a-vis as a bank, within the bank. Another issue which is, I think, nowadays we are talking about is the issue of the banks requiring the capital in the next 3 to 4 years, which is estimated between various figures from 2 to 6 lakhs crores. Now, seeing the banks' present balance sheets, most of the banks, whether it's a small bank or a big bank, I think raising of capital is a concern. So the question now is whether the banks should individually go to a market, or we can have a holding company concept who can hold the capital of the bank on behalf of the government, and that holding company, because of being a large size, it would be in a better position. So seeing the present state of affairs, what I feel, I think a holding company would be required. Individually for each bank to raise that amount of capital perhaps is a very, I think, a tedious job in the present circumstances. So holding company would act as a leverage by the sheer size. It can go to the overseas market. Now we have a very limited resources, say in India, in the domestic market. Presently, for a bank to raise capital, we don't have such a good position, the capital market as such. Overseas, when we go, our size matters again, as we were talking about the size in the global scenario. That acts as a constraint. So holding would definitely be, I think, a better model. And that can also help to a great extent, although it's not a question put up to me. One of the concerns banks face is I think especially on the staff side, is the CVC and these issues. So they are constrained. They are not able to give the full output, not take proper decisions. Once that concept introduced, I think that will also help us in mitigating that element. And I'm sure, I think, a holding company concept should be beneficial for the banking industry. It may take now or in the next 1 or 2 years. That's only the moot point. But with the support not coming from the government, a holding company, I think, is the only way out. That's what I can say.
Thanks a lot, Mr. Takkar, for sharing your views. My next question is to Mr. Misra, again on the entire subject about financial literacy. And so we've talked about, and as you rightly alluded to the point that, there is a lot of flux that we're going to see in terms of people, etc., retiring and all of that. One of the main concerns has been to, really have the entire financial literacy reach the rural areas where actually there is a lot more need to interact with people. One of the strategies that banks are looking at adopting is to turn towards branchless banking, to really turn about to that. Do you think that this entire concept about reaching the rural through branchless banking is a right model, or there are other strategies that one should think about and adopt for these?
I think reaching rural populace through technological mode is the only model. The reason is we have a vast geographical spread, and fortunately our experience has been that our population is digitally literate. They may not be literate in the common sense of the term, but they understand how to handle digitally. So that is a great advantage, and we should try to build upon that advantage and see to it that our delivery through, say, mobile banking, internet banking, ATM, these modes are adopted. Because what I feel that this is the only way we can reach out to the people. As far as financial literacy in the rural India is concerned, I think we need to deliver it in a different way, in the sense that it should be understandable to them. It need not be a classroom type of training. It can be which is demonstrative, and that is how we can reach out to them. I think it is doable, and technological solution to reach out people is the only answer to the whole issue. That's my personal feeling.
Thank you very much for your views. My last question to Mr. Patrick Kishore, again coming back on the entire banking structures which have been talked a lot. A very simple question. There is a key debate about the banking structures, whether India should have smaller number of large banks or larger number of small banks. Whether we need to create the 5 top banks, or we have multiple banks, focusing on very specialized areas. What would be your views and thoughts about the same?
Well, I have very strong views on this. China has about 4 or 5 big banks. Very big. They're much bigger than what we call the big banks in India. Unless we have big banks, we will not be taken seriously in the global market. You can be a highly specialized bank, financing, let's say, only mining, nothing else. But if you want to be a commercial bank, you need to be very big in terms of assets, in terms of market capitalization. Otherwise, nobody will take you seriously. Even today, we have many small banks in India who are not able to strike correspondent relationships with the big banks in the West. The reason is that their balance sheet size is so small. Their assets are so small. So I believe that it is high time that we had this, we stop this business about, difficulty of merging cultures, difficulty of vast workforce and so on. And we need to bite the bullet and go in seriously about this bank mergers. I've been hearing about this from 1974 Saraya Commission. When they talk about 4 or 5 big banks, it's not happened. I think it's high time that we need it. Otherwise, what happens is we will not be able to raise money in the market unless you are really big. We will not be able to do really big ticket business, not only in India but also outside the country. Just look, almost every FDI proposal you come into India comes with their own bank. When China bids, when Korea bids for huge infrastructure projects outside, they go with their own bank. So why can't we do it? So unless we have that kind of a mindset that we need to have big banks, see, otherwise we are actually eating each other's business. But when you have this kind of merged entities, you can rationalize your operations. You can optimize costs, you can optimize the branch structures, and you can also make huge investments in technology. So I believe that, today if the banking industry has to take a totally different way of doing business, a quantum leap, we need to have this. Finally, we come to terms with merging of the banks. I think all this talk about culture and all that is synthetic. Once you get out of this, this one salary for all banks, one rules for all banks, once you get out of that, the market will make its own rules and we'll be able to merge very well. No cultures, no problem. We are all one Indians.
Thanks a lot for sharing your views. Now, I'd like to have the mic thrown open to the audience to ask the eminent panel members. So, I would request just to introduce yourself and then direct the question to the panel members whom you want the answer from, so that it becomes easy for the panelists to really answer the questions. So, can we have some questions from the audience, please? I would just request if you can switch on all the mics for the people, please.
Good afternoon, panelists. My name is Jay Soda, promoter of AOT Limited.
Could you be a little louder, please?
Yeah. Am I clear now?
Yeah.
Yeah. My name is Jay Soda from AOT Limited, Art of Technologies. My concern is about digital rural banking. What are the challenges that are there in terms of reaching out to these rurals considering that in India we have lack of infrastructure in rural, bandwidth problems, and so many other issues that are there. with the policies itself. So my interest is from the point of view of my concept, which is AOT Green Reality, in which bridging the gap between urban and rural through technology is my concern. So for example, in rural areas, somebody wants to buy out, do an e-commerce business or do e-banking. Then there are a lot of constraints which I come across. So what are the challenges? How do we overcome these challenges?
Anybody would like to take that question?
I think there are challenges, no doubt. I think what you have raised is a very valid question. Especially the networking, I think, is being an issue presently. I think that matter has already been taken up with the government to increase the bandwidth and make the connectivity in all the areas. So the government is also, I think, working on a plan. I think they have asked the BSNL and MTNL, who are the main service providers, to improve the infrastructure. Because without connectivity, I think the entire this gambit of financial inclusion in all the far-fetched, inaccessible areas cannot take place.
It will just remain on paper otherwise.
Sorry?
Otherwise, it will just remain on paper.
Just on paper, yeah. Although I think a lot of things have happened, but these are some of the issues which are being faced. And I think this one that is resolved, I think we should be able to implement it without any hassles as such.
My concern is practically what are the measures that one should take, or even the government should take initiative such that these issues can get resolved in a span of time?
Yeah, I think, see, this was one of the issues when we had the Gyan Sangam, where all the government representatives were present. So that has been one of the points of action. And how much time framework, it's very difficult for me to comment on that. But I think it's already, they have taken steps. So how long it take, I can't say anything on that.
Yeah. What I am visualizing...
I think appreciating your concern and the government's apprehension that financial inclusion may take a bit longer time. Good point is that these things have come now to the real focus. Even when these accounts are being opened, there is simultaneously from Department of Financial Services, there is simultaneously a talk with the DOT, Department of Telecommunication, wherein they have been pushed those areas where connectivity is not there, how faster they will be able to do it. And I think they are also given to give a commitment that within this period they will be liking to get that things done. And it's happening. Of course, we are not from that field, but certainly there is a focus on that. So, second issue which you are trying to say is, incidentally, I have visited that Jaipur village which is being adopted by our Prime Minister. The branch which Union Bank has opened there is 100% green because there is a solar power being given, electricity connection, everything is there, telecommunication link is available. Link is available, but what happens is availability is only 2 hours, or it gets off and on. So these are the issues which are not directly linked to banking, but as a government I know of, because then when there are a video conferencing happening upon the financial inclusion part, this matter is taken up very seriously. I think the time limit, if it cannot be specified, but within 5 to 6 months you will find more of mobility happening on that.
Thank you.
I'd just like to add one more line. See, the National Broadband Initiative is to reach all the villages. But then there would still be some villages which are not feasible. So the government is seriously thinking about VSAT connections in those places. Now, okay, that's as far as connectivity is concerned. Now, a lot of these villages also have community service centers, because that's an integral part of the e-governance initiative. So it will be possible for these CSCs also to function as, let's say, have one kiosk which will enable all this kind of online commerce. But then, all of us, even in the cities, when you go to an e-commerce site, there is so much clutter on it. These pages are so heavy. They need to connect to set up so many connections to various file servers that it takes a long time for the page to load. So if you want financial inclusion, that is, you want somebody in a remote village with a very, very high latency, low bandwidth connection to do online commerce, then those pages will have to be suitably designed also, so that they are very, very light. Text only, maybe only one image on a page. You have to make it very, very light. Otherwise, it will take ages to load. Right?
Can we have the next question, please? Yeah. The mic, please. To the lady. Yeah, in the front. Now, it will be better if you can direct the question to any of the panelist members. Thank you.
Yeah, good afternoon to you. My name is Sindhu Mehta, and I'm from the Technology Advisor Financial Group. My question directly to Mr. Patrick. Yes, you raise a very wonderful point. Worldwide, when the bidding comes, every country comes with their own bank. One side of India is passing the new license to the new banks, to private sector. Now, where the RBI amendment, this question may not link to you. What is again inclusion taken care or the measure taken by the RBI? Or from the association, or from the Indian Institute of Finance, or from the NAFCA, where there's a cooperative association or national association, all the banks, whether it's a big bank, small banks, or the private banks. It looks very daisy picture that where this is going to end and when. Our Prime Minister is announcing for the remote area, the postal banking is the best banking. Now where this is going to end and what?
Yeah, I see that you see the contradiction in what I've said, yes. See, the problem is we have banks which are doing totally focused on domestic business. There are banks which need to be outward focused, especially when you have this Make in India and we have this drive for exports. We want to have our place in the sun. That's when you need big banks. So what I believe is there is going to be, or there needs to be churning. Now I'm not from the RBI, I cannot talk about policy. This is my, I've worked in the bank too. I was in the State Bank for 38 years. So what we find is a lot of energies are being frittered away by competing with each other in India for a very small piece of the pie. So there is a need for large banks. There is a need maybe for small banks, local community banks. But definitely we don't need so many banks with a national footprint. This is my view. Okay.
But then I realized there is nobody's initiative about this. So where is the proposal? Either from the association side or where there is a proposal to the RBI or forming the rules.
Well, I remember the Saraya Commission 74.
Yes,
Subsequently, there have been various, there's been talk only. There's no concrete action plan saying that, okay, within 3 years, within 5 years, we'll have this structure. Unfortunately, that has not happened. No.
Thank you.
Can we have the last 1 or 2 questions so that, anybody else for the questions? I think then that's fine. So I think I'd really like to thank all the eminent panel members for sharing their views and opinions about this thing. It's really been a pleasure listening to all the dignitaries out here on the stage. And I'd also like to thank the audience for giving a very, very patient hearing and listening to these thoughts and ideas. Thank you very much, and a very good afternoon to all of you all. Thank you.
Thank you very much, everybody, for your inputs to the session. And with that, I'm now going to request our session chairperson to please hand over mementos to each one of our panelists. Ladies and gentlemen, we request you to join in with a round of applause. May I request Mr. Eric Anklesaria to please hand over a memento to Mr. Rakesh Sethi. Can we have a round of applause, everybody? Mr. R.K.Takkar. Mr. Patrick Kishore, may we request you to please accept this memento? Dr. J.N. Misra. I would request Mr. Srinivas, the Managing Director, PDA Trade Fest, to please join us on stage and hand over a memento to Mr. Eric Anklesaria. And with that, I would also request Mr. Varadarajan to please join us on stage and accept a memento from Mr. Srinivas.